Welcome to the Treasury Update Podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome back to the Treasury Update Podcast. Today we're going to be going over regulations, rules, delays, and procrastination. Craig, welcome back to the show.
Thanks, John.
So what's the meaning of titling a podcast like this?
Well, I'll start with procrastination because there's some rules and regulations that have been delayed, both formats as well as regulations for beneficial ownership information reporting. Procrastinators have squeaked by. Their motto is, don't put off to tomorrow what you can put off to the day after tomorrow, has been rewarded in a sense. But I also don't want people to get comfortable in thinking that these things are not going to happen. And so that's why the title, right? There's a few things that have been delayed very recently that impact much of our audience. And then there's one item that will be of interest to the audience, I think.
Okay. And our topics today are BOI, or Beneficial Ownership Information, Treasury's Clearing, and ISO 20022. So starting off with BOI, what's going on with beneficial ownership information today, and why does this matter?
So let me just do the summary first for those who want to skip on to the next topic. Anybody who's a reporting company, anybody who has reporting companies that have to report beneficial ownership information, they're not currently, as of the date we're recording, they're not currently required to file their BOI reports with FinCEN and are not subject to liability if they fail to file while this order is in place that suspends that. And reporting companies may continue to voluntarily submit BOI reports. That's the summary.
So can you break that down a little bit?
Real briefly, the Corporate Transparency Act mandated a number of financial disclosures. The most common one, or the most discussed one, appears to be beneficial ownership information. And this is where there's quite a few entities that are identified as reporting companies. And that's where you report beneficial ownership information. Essentially, people that own 25% or more of corporations, who are the owners of a significant portion of that. And so that's a requirement, and it's based on some of the rules to stop illicit finance threats. I'm reading from the FinCEN site, like terrorist financing, drug trafficking, and money laundering. This builds a list of ownership, significant ownership levels across the organization, and it's meant to reduce some of the loopholes that have existed where criminals have taken advantage of those.
So why isn't there any current requirement for the companies that are filing?
It's interesting to me. I'm not sure how many people find it interesting, but it's like on, off, paused. And so there was requirements to file. Certain rules for BOI reporting went into effect for January 1st, 2025. Well, there was a court case, and then there was some rulings on, okay, this is those that are filing the court case about the overall legality of CTA don't have to file, others need to file. And there was a delay in the requirement and a stay, and a number of activities that went back and forth. That currently the position the government believes CTA is legal, the Corporate Transparency Act is legal, that it's not necessarily, or that it's not in conflict with other constitutional concerns. But there is the courts have made it so that it's not required to file BOI. You're not required to do BOI reporting currently. Now, if it gets decided in favor that you have to file BOI, how quickly will you have to file? It could be almost immediate or instantaneous. And so many of the accounting organizations, accounting firms say this voluntary submission of BOI reports makes sense. Go ahead and do that. As we went through, the submission of the different budget rules, the large budget that was rejected by Congress, the huge one, put this off. And then the more abbreviated version didn't contain any kind of delay or removal of BOI in that time frame. And so it was back on. And so this back and forth right around Christmas, over New Year's, and just after New Year's, all these rules happen. So right now it's not currently required. It's voluntary. The accounting firms, most accounting companies and associations say, go ahead and file, get this done earlier on a voluntary basis.
Do they have an updated time frame when the next decision will be made?
I don't know when the next thing will happen, how long it'll be drawn out. I don't believe it's going to take. It's not going to take years. I think it's months.
So not required, but recommended by a lot of accountants. What's your overall summary of BOI?
If the Corporate Transparency Act is illegal, BOI reporting would fall from that because it originated through that. If it's legal, that's going to be decided, and everyone will have to file. Filing is not particularly complicated, and it's recommended by various accounting groups. We think it makes sense to move forward, for reporting entities, and mainly I'm talking to corporate entities here.
Gotcha. And moving on to our second topic, Treasuries clearing. What's going on here?
There's about $27 trillion of outstanding U.S. Treasuries, which is almost the equivalent of the U.S. economy. These are very stable investment vehicles that are commonly traded. They're viewed as zero risk or almost zero risk because they're backed by the full faith and credit of the U.S. government, and so it's an enormous market that exists. And average trading volume is just under $1 trillion a day, so $870 billion from the SIFMA report. So the summary is what's going on with U.S. clearings is there's a move to all of U.S. Treasury's cash activity has to be centrally cleared by December 31st, 2025. And, repo central clearing has to occur by June 30th, 2026. To improve risk management, most market participants need to clear cash and repo U.S. Treasuries centrally. And this is a pretty significant impact to market participants like broker-dealers, institutional investors, principal trading firms and the like. A huge portion of the market, between about 3/4, 70 to 80%, remains uncleared today. And the SEC chair indicate that this increases system-wide risk because a huge portion is outside. There's risk in that. And so this is an objective to reduce that risk by clearing it, having it cleared centrally. In addition to system-wide risk, the SEC also has stated a belief that central clearing reduces counterparty risk between two counterparties. Something fails in the transaction. So this is a risk reduction activity. I would point corporate treasury. I would point them to the SIFMA published considerations report that was done in conjunction with E&Y. It's a lengthy report, but it's worth reading to get some of the background on that.
So who does this matter for? What does it mean?
Well, I would say it depends on what type of organization you work for will impact how much this matters for you, right? If you're directly involved in that, it's more significant. But almost everybody in corporate treasury should at least be aware of what's being done and the timing. And it's pretty easy to read to just be familiar with what's going on there. That's helpful background, and there may be some direct impacts to you as well.
So it's more of a knowledge and not a direct impact to things that you're doing each day.
Right. Your broker dealer, others may be involved. If you're directly involved, you're in this at a deep level, but it is useful to know what they're doing to reduce system-wide risk. And as you look at counterparty risk generally, knowing how some of these activities are being done to reduce risk in the process, we don't always think about risk. If we say, oh, I've got U.S. Treasuries, I have no risk. Well, central clearing is meant to reduce one aspect of the risk of these riskless, what's viewed as riskless investments.
Very cool. And moving on to our third and final topic of the day, we're talking about migration of MT101 to ISO 20022 or PAIN.001. It's been deferred from its deadline. Do you want to give a summary on this?
There's a lot of terms here, so hopefully people that are listening know what they are, but we'll go through them. MT101, the message type 101, is a payment issuing format. So this is the format that's used when you're making a payment. Let's say a corporate's making a payment to somebody else. The MT101 transitioned to the new XML format, the ISO 20022. PAIN.001 is a XML format. So that transition where you had to move from the legacy format to the new format is delayed past November 2025. That was the deadline. The future date, as of the time we're recording, hasn't been stated by SWIFT yet, but that's going to be put out shortly. So the MT101 which more corporations are going to be familiar with, is delayed past November 2025. The MT-103 is not delayed. This is usually referred to as money transfer bank to bank. So bank to bank, banks aren't being delayed at all. So the MT-103 is not delayed. That will still occur. The other piece, which I think everyone needs to know about, anybody who's involved in payments, especially on a global basis, is structured addressing is required by November 2026. And there's certainly an ongoing increased demand by regulators and central banks for purpose codes on payments to be included. If you're not familiar with what we're talking about, that just sounded like blah, 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 blah. But structured addressing is one of the key ways that central banks and different regulators are tracking payments to make sure they're not going to, sanction parties or their very issues. I think it's important to know why. Why is that the case? So in payments, there's different rules that may change. A certain country may require a more detailed address as opposed to an address embedded in a field. They may look for address in separate fields, so it's easier for the systems to process it to ensure compliance. So maybe not including an address to including an address to including an address in a structured field so that the systems can manage it. That's becoming required by more and more central banks, more and more regulators. We also see a growth in requiring purpose codes. What's the purpose of the payment? So it's not just like, here's money, it's going to a certain party, but what is that payment used for? And so regulators and central banks are adding that.
And it's impossible to include that in the older MT-101 format?
Well, yeah, there's a number of factors. What's restricted and allowed in fields. It might be combined fields. Now they need to be secondary, broken out. And so it's just not the MT-101 and some of these legacy formats are not built for continued changes. It's much easier to do it in an extensible markup language like the PAIN 001, following the ISO 20022, structure that they have. Yeah, just a couple more things on it. So an MT-101 payment issuing format is, I send payments. I always tend to think about them as wires, but you can use multiple types of payment rails for that. So it's a payment. It's forwarding a relay. Let's say you're going through counterparties. Deferral doesn't mean cancellation. Deferral means it is delayed. It will come later. We just don't have the date. What does that mean? The MT-101 format, the message type 101, will still be supported in the FIN messaging layer. FIN messaging layer is the messages used and sent across SWIFT. So they'll still be able to send it through the SWIFT messaging network, with the new end date not set up. So a little bit of reprieve for those who may have an immediate impact on what they're doing, but it's not a reprieve. By itself, it's a limited reprieve. There's a little bit more room to make those changes.
Okay. And do you know why it's being delayed?
I don't know that they stated all the reasons, but usually these things are delayed is because not enough movement has made. There's too many members of SWIFT, banks and central banks, who say this has got to get pushed off a bit. We're going to have a problem because not everybody's ready. And so, and oftentimes some of these regulations, you see them are rule changes or deadlines. Some of them get deprioritized and moved, once to provide people more time. They don't always get delayed, but oftentimes something significant like that, like a whole formatting scheme being moved, can create a reason to delay it.
So what does this mean for companies?
Whether you're sending stuff through SWIFT directly or your banks are sending SWIFT through SWIFT or you're using a treasury management system or a treasury aggregator, your payments many of them may be going through MT-101. That may or may not matter if someone's translating it for you for the very short term. But what this means is you will eventually have to move to a PAIN.001 format, an XML format that will allow you to support some of these format requirements, right? The idea that there's structured addressing, there's new purpose codes. When you're making changes to anything today, you should make changes and move to the new format, move to the new structure that exists. You will be required to do that at some point. So anytime you're touching something, move. But this should be part of your plan if you're making payments in any complexity. If you're, let's say you're a U.S. domestic company, you're just doing some ACH payments, maybe you're doing wires through a bank portal, this will have very, very, very little impact to you. Probably no impact other than to be aware that that's happening out there. But other organizations that are transacting through multiple banks in multiple countries almost certainly have to make changes to this in the very near term.
Cool. Well, thanks for sharing your thoughts on these 3 topics. Any final thoughts here?
Procrastination, the fact that things get delayed is a nice relief for some people. But too many organizations, in our view, put off making essential changes. And when you put things off to making essential changes, you have to do a lot more hurried work at the end to comply than if you have a strategy for, hey, I'm touching this payment format. I'm moving. Every time I make a change, I want to move to a newer format or the most current system so that I have much longer runway. I think that's a much better strategy.
Cool. Well, thank you. And I think that this audience that would listen to this podcast is also the same audience that would enjoy listening to our new ebook that we just released, our 2nd edition of Leading Practices in Treasury. Craig, do you want to give a little recap of what we cover in that book?
The book covers a whole bunch of areas that are important to Treasury. And so this is a distillation of quite a bit of content we've put out. It's assimilated together. This whole series, we have found it surprising how many people are engaging on it, downloading it, listening to the content on these topics. And so this is, whether you're very experienced or whether you're new to Treasury, there's something for everyone in this package. And I'd love to hear people's comments on that. And what are other topics that you may want covered in this series? We have a 3rd one that we're working on right now. We'll probably do a 4th, a 5th, a 6th, but we would love some input from people who enjoy this content about what else they'd like to see.
Yeah, it's very interesting. We just recorded a video version of it that will be coming out in the future. And I will leave a link to download the ebook in the podcast description below. So thanks for listening. Thanks for sharing, Craig.
Thank you.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.